We start, though, here with CNBC's Steve Kovach. He's alongside me once again to help set the stage. It's great to be with you on what has become an annual tradition for us, for what some now are calling a prove-it moment for this company.
Yeah, it's exactly it. Because when we were here a year ago, Scott, what did we get? We got Apple Intelligence. There was all this pent-up questions and demand and wondering, what is Apple going to do with AI? Well, it was Apple Intelligence. And since then, we saw the rollout. Some of the features did roll out on time. And we saw this idea of Genmoji and summarizing notifications. And they were cool. They were okay. ChatGPT came along. That was okay. And then the big whiff this year that was missing out on that AI version of Siri, where that was supposed to be Apple's answer to ChatGPT and all these other things. Well, that is now indefinitely delayed. So here we are, Scott. The pivotal moment for them to kind of reset the stage here, reset expectations. How are they going to play along with this AI thing? And like we've been talking about last week, there are a few things they can talk about right now that can kind of alleviate some of the concerns. One is making more partnerships like they already did with ChatGPT. There's Google Gemini, which a year ago at this very event, Scott, they said, hey, we are going to partner with Google. We are going to incorporate Gemini into this. Maybe we get that today. Eddie Q, the services boss, testifying in that Google DOJ case few weeks ago saying, hey, we're looking at Perplexity, that hot AI startup that is already becoming a search AI engine for Motorola, soon to be Samsung. Maybe we'll see that in Apple too. And then there's the developers. This is a developers conference after all, and they need to convince developers we have the AI tools that are just as good or as better than what you see from the competition.
You point to a backdrop with a lot of pressure on this company. The Wall Street Journal today, one of their headlines says Apple's growing list of problems clouds AI reboot, AI troubles, tariffs, Google payments, App Store fees way down on the stock ahead of WWDC. I guess my question to you is, will they deliver enough to satisfy people who want so much, whether it's the analyst community or the shareholders? Brian White was on the network earlier and said they probably won't make a big, bold announcement today around Apple Intelligence. Is that going to fly?
Yeah. The vibe is much more muted than it was compared to a year ago because, remember, what they announced did not come to fruition. They failed to deliver on this big AI promise, Scott. And they're going to be very careful this time because they lost a good fair amount of credibility by saying we're going to have this amazing new product. We're going to advertise it along with the iPhone 16, say this is a reason, Scott, why you should buy an iPhone 16. There's supposed to be a super cycle. None of that materialized. So they're going to be extra careful that everything they say on stage today is actually going to launch when they say it's going to launch.
The stock really tells the dramatic story, doesn't it, guys? You take a look at what the stock has done year to date. It's obviously dramatically underperformed its Mag 7 peers, and by no small amount. Tesla feels like it's in its own category, of course, but if you look at that performance on a list, you will see there is Apple. It sticks out like a sore red thumb, down 18%. That stock is on the same time frame. Now Microsoft today is going up for 8 days up in a row, right? So it gives you the divergence between some of these names. Rob Sechin, I said you own the stock and you own it outright. What are your own expectations coming into today?
Well, maybe you get some exciting news from this conference, but given their slow progress on AI thus far, Scott, I think it's fair to be skeptical. That said, historically, this stock has really performed well in the 3 months following this conference. Over the last 15 years, the average gain is about 12%. And there was only one down year, and that was the 2015, the year of the China growth scare. And last year, we were up 14% in the 3 months following. Obviously, they delivered that news, which never met expectations. But we realize this may be a sell the news moment for them if they don't deliver something absent a big AI announcement. But it's hard for us to be too pessimistic on this name, and it's hard to be materially underweight Apple, given their management is typically shareholder friendly. They have a tremendous balance sheet. And there's a ton of negative news surrounding this stock. So when you have that kind of cocktail, we're neutral. We decreased to neutral. We didn't want to go lower than that because of what we saw in the second half of last year. So long-term core holding that we're neutral right now. Hopefully we get some good news.
Yeah, neutral, Joe. Joe, you no longer own the shares outright, but as I mentioned at the very top of the program, you do through your Joe T ETF, which looks at quality and momentum. This stock, I don't think anybody would argue with the fact that it's quality, and Rob lays it out as to why, and you've been punished over the years if you've gotten too pessimistic. But what about momentum? Can today get the momentum back for Apple stock?
Okay, well, first of all, as it relates to today, I think there's one important word, and I heard Rob mention it, and that's progress. So potentially, Scott, just enough progress on the development of AI and the ability for developers to contribute there, that might just be enough. And I think one of the reasons why that actually might be enough is because if you look at the sentiment surrounding this stock, and it's had an awful year, and it's probably directly attributable to the trade war and sitting in the center of that contentious situation right now. But if you look at sentiment, you take the 7 largest technology companies, Apple has the lowest percentage buy rating of all those 7 companies at only 60%. So there's not strong, compelling belief behind this company. It's kind of waffling. It's kind of, as Rob said, you can't not own it, but you're not really excited to own it because is it really a growth stock anymore? It really trades more like a value stock. Why are you owning this stock? You're owning the stock because of the ecosystem, high margin services business, the ability to return capital to shareholders, but the revenue growth is missing. You haven't seen double-digit revenue growth in this company since 2021, and the expectation is as you look forward over the coming year, you're not going to see anything more than maybe mid-single-digit revenue growth. And you mentioned Microsoft, that's going to give you double-digit revenue growth. Alphabet's going to give you double-digit revenue growth. So this is really becoming more value tech than anything else, and it's not that exciting.
I'm trying to figure out how you can call it value tech when it trades at 26 times. It trades at a growth premium. It doesn't trade as a value stock premium in any way. So for somebody who owns it, you're suggesting it's overvalued?
I think potentially it is. I think over the last 10 years, the average valuation on stock is somewhere around 22 times. By the way, I have it trading at 27 times. I could be wrong on that. It's down from 34 times.
Fine, 27, 26. They both make the point. It's not trading at a value multiple.
Okay, but they're both above the historical average over the last 10 years. And I'm not growing at double digits anymore. I'm not growing like I was back 7, 8 years ago at 20+%. I'm growing at 4% at best. And there are years like 2023 where I'm actually having negative revenue growth.
Steph, you've been the doubter, I suppose, is the best way to say it. You have a sell rating on the name. I mean, because you did own it and you sold it. And as I wrote in the intro, you haven't looked back. And one of the reasons is the valuation, right?
Oh, yeah. I mean, 26, 28 times forward estimates for 7.8% earnings growth and 5.1% total revenue growth. I'm not paying 28 times for that. And it's really interesting. It's like what a difference a year makes. Because last year, I actually bought the stock ahead of WWDC because I expected them to talk about AI and that to be the catalyst. Fast forward to where we are today, they haven't delivered on AI. And as a result, iPhone 17 is not going to be a super cycle unless they have AI in it. So to me, I think you have time. And oh, by the way, yeah, the tariffs are a big overhang. If there are 25% tariffs on Apple, they're going to have to increase pricing, something like $200 to $400 per phone. So, you know, that also might eat into the demand side of things. So I just think this is kind of dead money. I know it's down a lot, but it's just not cheap enough for me. And I think you have time.